So the way I see it is over next 2 years, the earnings CAGR should be somewhere in the range of 15 to 18%. And I think equity funds or the stock market would broadly mirror that earnings return, because right now our price to earning multiple is at the median or slightly above that. So even if that goes back to median, we should get a return which is roughly proportional to that earnings growth. So I think a couple of important things are, one is of course the state election results, because uh, some of it has become a de facto referendum on demonetization. So the way the government functions is going to be influenced by the results of the state elections. The other important thing I think is the interest rate outlook, because our sense is inflation today is fairly muted, and we think there is a reasonable chance that interest rates could go down eventually, and that is likely to be a big trigger for the stock market. I think the way advisors can talk to their investors is to show uh, the way stock market has outperformed a lot of other assets, primarily physical assets like gold and real estate, not only just in absolute returns, but if you take into account liquidity, the tax efficiency, etc. I think those can be really big selling points for advisors to convince their clients to come to the stock market. Definitely, the global events have a very big impact on the Indian stock market, because the foreign investors are a big shareholding in the stock market. So, events like US interest rates, the debt situation in China, the growth in Europe, Japan, etc., do play a big role in the Indian stock market. I think this year the big events to watch out for is, one is of course the trajectory of interest rates in US, and also I think what's going to become important is the political situation in Europe, because you have fairly important elections, primarily in France, Germany, etc. And if there are some disruptive outcomes there, then there could be some volatility in Indian markets as well.